everyone will be commenting and everyone will be focusing on three key performance indicators. I'll call it KPIs from now on. These are, of course, the Fed's outlook for the inflation. The second one is the Fed's outlook about the sustainability of the employment levels for the US. And the third one, of course, whether or not the Fed will be hiking the interest rates or any comment on it. So these three specific commentaries will generate the most volatility in the market for today and also probably for tomorrow as well. So you as a trader, you need to look for these as well. If you end up seeing that the Fed is about to hike the interest rate, just watch it carefully. You would be likely to see that US dollar would be appreciating rapidly. That would end euro dollar into a bearish game. That would end gold, well, probably bearish game as well. I think definitely actually bearish game. Of course, GBP USD Japanese yen would go into a bullish zone, and S&P 500 probably would get also a bullish outlook. But we will have to really see it. But there might be a little twist on the S&P 500 that the market would see that the capital outflow would get out of the stocks, and it would be going into the forex market, or in another word, keeping it in US dollar. So S&P 500 actually could get a negative bearish outlook. So I will not really look more into the S&P 500 or DAX or any other index, but we will look more into the forex part today, and maybe a little bit about crude oil and gold, depending on the time we have. So the main thing that I want you to look into is the following. Today's webinar is delivered by Trade 360. So the platform that I'm showing you right now, it indicates the crowd's insights, whether how many percentage of the traders are generally longing or shorting specific currency pairs. Like as an example, at this given moment, you see that 74% of the people are longing gold, while 26% are shorting. If you have been following my outlook for the crowd trading insights, you would see that whenever the market goes more than 75%, I actually tend to change my outlook. So I will be looking for, based on this scenario in front of me right now, I will be looking for probably and most definitely a shift from gold. Now let's move into the chart and see what's really happening. The very first pair that we'll look into today is gonna be the British pound Japanese yen. I shared an analysis on a2zforex.com yesterday about the levels where you can consider long opportunities for GBP Japanese yen. If you were participating in our Monday session, we discussed that on Monday the market was moving within this orange rectangle level that I had. It was the side range level that we were looking into for possible breakout on either direction. So as the market broke below, generally like it always happens for any Japanese yen pair, whenever a range is broken, you see the volatility increasing and the momentum increasing, and obviously the rally taking place. That's exactly what has happened yesterday, based on, of course, the Bank of Japan's monetary policy announcement as well, and also the fears still in the market about the Brexit. We saw the Japanese yen appreciating rapidly and GBP Japanese yen getting into bearish zone. The pair so far found itself a support at 100% Fibonacci retracement zone, and I believe that this is not it yet, as I'm expecting the 110% Fibonacci retracement zone to be touched first before we see a real bullish correction wave, or even possibly a reversal. So I'll be looking for 158.20, 158.40 level to be checked first. in order for us to consider long opportunities, and that's the 100%. If we go back on weekly time frame and take a look at the current level, why I'm really looking into that level, you can see that over here we have had quite significant support resistance level at 158.20 levels, and even if you go backwards, you would see this level getting more and more stronger. If we look into the historic time zone, even back to 2008 level, you can see that at 158 level there has been significant support resistance level overall, but the biggest support is expected, by the way, to take place at the level of 156 level. So my recommendation would be careful and look for the actual 156 level as well. If you are going to be longing the GBP Japanese yen from 158.20 level, use as maximum or minimum of 40 pips and maximum of 70 pips of stop loss, and be cautious. Don't take or don't overtrade. Your targets should remain initially to 159.80 level, then 161.50 level, and last but not least, we could even possibly see the pair rise and touch the 164 level overall, which is even 165.45 level. Moving on to GBP USD cable, we can see that cable has been just like the GBP Japanese yen. It has been on the bearish run. The only support that is in front of us at this given moment is 1.4075 level overall, and if this level is broken below, we will see the rally continue, and the first target for us will be 1.3990 level, which is 138.2% Fibonacci retracement zone. If we move on to daily time frame, we can see that the momentum on the bearish side is still very strong, for the fact that 250 moving averages are both sloping downwards. But only one thing that gives me a little cautious outlook is the structure of MACD and RSI, as we have a divergence occurring here. While the market is making a lower low and lower high, RSI is making a higher high overall and higher low as well. Similarly, MACD as well. Both MACD signal bar and MACD the bars, they are making higher lows, which creates a divergence. So I would look for a cautious side, and potentially, probably, let's put it this way, I'm 95% secure that the market is gonna go into bullish mode from 1.3975 level. So today, if you see the market getting crazy, my recommendation or my suggestion would be to look for the pair to touch the 1.3960, 1.3975 level, and look for possible bullish entries from there onwards, which is likely to be triggered. The next pair we should look into is the Aussie dollar. As we discussed last week, I was telling that Aussie dollar is definitely gonna be touching the 0.7580 level. That was our bullish targets, and of course the short levels that we were aiming for. That level has triggered so far. 0.7580 level definitely has been triggered. As a result, we have closed our 180 plus pips of bullish entries that we were after, and we have also triggered the short order that we had at 0.7588 level. It was the sell limit order. So are we out of the market? Are we going to be keeping our position or not? If you are still holding on to that short position, my suggestion would be to move your stop loss just to the level of 0.7520 level and hold on to your short level, as your target should remain towards the 110% Fibonacci retracement zone, which is at 0.7350 level. This is the level that we will be aiming for. That also means we will be looking for further bullish entries, as well as the price action is telling us that, look, I'm on the bullish side. Don't you dare really entering much of a bearish positions for us. So if you really combine these two things to each other, let me just show you what I really mean. So we basically take the combination of these trend lines, and the level that you are looking for is the following level. That is the 0.7380 level. So this can be our main take profit for the short orders, and you should be looking for 0.7340 level to 0.7380 level for further bullish entries. The reason for it is that the combination of these two main support lines, and if you go backwards on the history as well, you would see that this level becoming a major support resistance level, which has been broken, and it's likely to be tested now, which can give you further opportunities for another bullish entry. So that's the outlook for Aussie dollar. Look for bullish entries from the 0.7380, and your target should remain bullish initially to 0.7588, as we said before. And if that level is broken above, we will look for 0.7755 level, which is 200% Fibonacci retracement zone. I've added an additional currency pair based on your requests, and that's the New Zealand dollar Japanese yen. On weekly time frame, we can see that the market is moving on, well, quite sideways development. So that gives us an opportunity that we can take advantage of the market. So if you just put on weekly time frame the following trend line, we can see and define the support resistance level. And if we combine these two, well, lows as well, we can see that there is a triangle formation over here. On daily time frame, the triangle becomes much more visual, and we can even combine it a little differently. So if you combine it the following, we can see the support resistance levels becoming much more obvious and much more defined, because weekly and daily time frames are not exactly the same. So we are looking for this triangle to be broken. Upwards, downwards, my outlook is actually to be broken on the upwards section. That being said, we have the daily resistance level at 0.7570 level. So that's gonna be, if you are long in the pair now, which you can, it's your stop loss should be approximately at 0.7430 level, which is approximately 80 pips from where we are now. And your target initially should be at 0.7570 level, then 0.7610 level, and last but not least, our main target will remain at 0.77. Sorry, I meant 7777 level, not 0. On hourly time frame, we can see this more clear as the market touched basically the trend line that we were talking about and reversed backwards. The market has found itself a resistance at the previous support that it had, which is at the level of 0.7. I just keep saying 0, but just ignore the 0 part. 7520 level. So as long as not as long as, but when we see the break above the 7520 level, the momentum is going to be definitely rising strongly, and we will be seeing the market moving on the bullish side much more rapidly. The main and most traded currency pair of the market is obviously the euro dollar. If you are trading it, you can see that the sideways development is still there. this is the weekly time frame, and the market just keeps on trading between 1.15 to 1.07 level for the last, I don't know, almost 13-14 months. This is the side range, but the entries that we can discuss can appear on hourly time frame. As an example, if you look at the previous hour's candlestick formation, you can see that that's a strong possible reversal candlestick formation, which has acted already, a small development over here. But nonetheless, if you want to enter long position, you could consider it. Your stop loss should be at the level of 1.1050 level, more or less. That's approximately 35-40 pips from where we are. But your best shot for such entry today should be at 1.1080 level as your entry level. It's approximately 10 pips from where we are at this moment, and with it we can look for the market to enter into the bullish mode, at least until the FOMC. You would see that whenever that rally triggers, the market will definitely break above the 50-hour moving average, which is acting as a dynamic resistance at this given moment, and we would see the movement on the bullish side. It's likely that the pair is going to find itself a main resistance at 1.1215 level for today, and even possibly to 1.1242 level overall. Well, 1.1215 is actually the previous high on daily time frame, if I'm not mistaken, from the 10th of March it was. Yeah. Let's move on to gold and finalize today's session. On gold, we have seen the valuable metal finding itself the resistance at 1,286 level, 85 level. The main target for us for the bullish entries was at 1300 level, but as we also said that we should be looking for, well, at least last week, we should be looking for sell orders or sell potentials from 1276 level. The next one right now is possibly much depends on the Fed meeting today, but rather important it is that we could possibly see a bullish development as the Fed is likely to say that the world economy is not doing well, and we wouldn't be hiking the interest rates. That's at least my outlook for today. There is a question over here that what if the Fed is dovish, but they keep the door open for the rate hike later on for the year? Well, that's what they have been telling so far, and each time they say so, the US dollar appreciates a little bit and then starts depreciating. So such commentary would trigger the roller coaster effect that we would be seeing in any case for the US dollar. So should we wait for the gold trade entries after the Fed announcement? That's at least what I would do so, and my target for gold would be to see a break above the level of 1239 in order for me to consider any bullish entries. If I go on hourly time frame, you can see that for the last 2 days the gold has been on a rather sideways development, and we have a very clear support and resistance level over here. Basically, if you combine the highs and lows just like this with a simple trend line, you get to see the direct influence in the market. And let's just take a look at it. Well, I think this is it. So when we combine the market highs and lows with this structure, you can see a straight forward support resistance level. The previous hour's candle is indicating possible bullishness. So even at this moment, you can still consider a long opportunity, just 35 pips or $3.60 stop loss. Your target initially should be towards the $2.50 level, which is at the level of 1235 level. Additionally, you can prolong that order overall towards 1238 level, but the biggest bullish development should be coming if we see the break above the 1239 level. The Can I share my outlook for the rate hike or no rate hike? I don't want to gamble. I want to see the real numbers and trade up on it. So, but overall, if you see the market basically commenting that, or the Fed commenting that they will have a rate hike, which is very much unlikely, we would see the US dollar appreciating massively. And that would mean that bearish euro dollar, bearish GBP USD, bearish Aussie dollar, bearish New Zealand dollar, US dollar, bullish USD Canadian dollar, and bullish USD Japanese yen. The biggest move should be definitely them coming from the USD Japanese yen, as the divergence between the Fed and the BOJ Bank of Japan I'm referring to would be increasing rapidly. So that would be the biggest market move that I can expect, and in such case the gold would be depreciating as well from our experience. And since the US dollar would be getting stronger, that would also mean that crude oil would depreciate majorly as well. The other way around, if the Fed says no, we could see complete the opposite movement in the market. Nazim, I won't answer your question because it will confuse so many new traders here that we have way too many people. But overall, my suggestion for you would be that not to trade up to the 5 minutes before the announcement for any major news announcement. If you see such thing happening, just exit the market, because first thing first, your spread increases 5 minutes before the news announcement. Secondly, your latency increases. Thirdly, your slippage increases, and fourthly, the slippage increases because of the low liquidity in the market. And fifthly, if you are trading with a stupid broker, sorry for my French, but it's very much likely that you would see your entries triggered at the wrong price.